Hey, Catherine.
Hey, how are you?
Good. How you doing?
Good.
Excellent. Well, thank you. Let's go. I know that you have a meeting at 2:30, right? So,
Yes, but don't worry.
okay, well, we'll get it started now. Okay, well, welcome everybody. Thank you everybody who's logged on today for our Leveraging Market Stats to Boost Your Business series. We do this every single month here at the association. We're not only going to go over the official statistics, the latest statistics that are being released to the media today, but more importantly, it's about the trend lines. Where is the market today? Where's the market going to? And we're going to have incredible insight. And so let me introduce this month, our leader that is joining us today is an incredible leader. She's our 2023 Miami YPN president, Katherine Arteta. Thank you so much for being here. How are you doing, Katherine?
I'm fantastic. Pleasure being here and very excited to go over all the market stats and show everyone how they can better use them in their business.
Definitely, definitely. So let's go to the first question right off the bat. We're live, we're streaming live on social media and also here on our webinar. But what would you say to realtors that maybe they're just getting into the business and they say, why do I need to know stats and trends? Why is this important?
Oh, it's essential. Knowing your numbers is key to having a smoother process with your buyers and sellers. Consumers, they want to feel confident in the decisions they are making, especially when it's concerning one of the biggest financial assets, right? Take this market, for example. Buyers are under the impression that prices are going down. We are all hearing this all the time, but are they really? If you're not keeping up with the trends and the numbers, you're not going to know that the average price is actually increasing. And these are things which later on Chris is going to show you. You can easily access in your dashboard and get this data and show it depending on if you're working with buyers and sellers and the area.
Definitely, yeah. It's exactly what our chairman Ines says. It's about controlling the narrative, right? Knowing what is really happening. Okay, so let's go to our next slide here. This is our agenda. We're going to go over the official May 2023 statistics. You might be asking why you're releasing May statistics today on June 22nd, but the reason is because Florida Realtors, Miami Realtors, and NER gives realtors 2 additional weeks after the close of the month, just because not all realtors update their closing in the MLS right on the last day of the month. So we give them 2 months, 2 weeks extra, and that's why all the reports are coming out today at Florida Realtors, NER, and Miami. Okay, and so here's a look at our future Leveraging Stats webinars. We got an incredible all-star list. Venus Profer will be on the webinar on July 20th. We have Justine Jimenez Garcia and then Natasha Tello also. So please, you could register right now for upcoming webinars that we have coming up. And then, so this is being recorded. I know one of the top questions that's going to be on the chat is, can we get this presentation? Can we get the slide deck? The answer is yes, you can. If you could just type in your email in the chat afterwards, I'll make sure I'll get them all, and I will send you this presentation. So thank you guys for being on the webinar. And then also I wanted to say, before we get into all the different stats and trends and graphics, if you could remember one website, one major thing that we said today, and it's sfmarketintel.com. Try to make it easier for everybody out there. We put all of our statistics, all of our videos, graphics right here, sfmarketintel.com. And I might say it 1 or 2 more times after this. All right, Catherine, so let me get to our first graphic. This was a shout out to our designer, David Garcia, who helped put this together. This is a look at May 2023, 2 important statistics. But Catherine, I wanted to ask you about showing appointments. Showing appointments are up 1% year over year. What is the impact that on our industry?
So that's an extremely important fact, right? Especially now that everybody keeps saying that the market is slowing down. Unlike all the other markets in the nation right now, Miami is definitely not cooling off. On the other hand, there's still a very strong demand for properties in South Florida. And several of the factors that drive our market, especially prices, is supply, demand, and of course, what buyers are willing to pay. Prices are not going to drop while the demand continues to outweigh the supply we currently have. And we continue to see time after time that the showings are still continuing to go up.
Yeah, no, I love it. Yes, very important. So we're always going to keep an eye on that and on foot traffic. Okay, all right. So let's move on to another, it's a hot topic, mortgage rates. Last year, if you look at last year, it's such a volatile, it changed every single month. But now, perhaps a little bit good for our industry. It's been a little bit stable. It's been around 6 to 7% pretty much this whole year. What impact are you seeing, Catherine, on mortgage rates?
So I first want to say, this is one of my favorite slides. Everybody here should take a screenshot, a picture, and carry it with you, because this is the number one objection that we're getting. A lot of buyers are waiting for the rates to go down. But when is that going to happen? Is that going to happen? Historically, we were not in average rates. We were still in a recovery period from the crisis, the financial crisis. And we're creatures of habit. So everybody got used to 3-4% rates. That's not the case anymore. We're finally going back at, 6 and 7% are still not even average normal rates, as you can tell. Look at it, the 80s. Interest rates were even close to 20%. I vividly remember my parents a little over 30 years ago when they bought their house, and I have this memory so clear just because they were so emotional and so happy at the fact that they had locked in an 11% interest rate. Now everyone's screaming over 6 to 7%. But again, we're creatures of habit. Eventually they will adapt. I know everyone right now is very tired of hearing this, marry the house, state the rate, but it's something that we need to instill in the buyers. Prices are still appreciating. They're going to appreciate just because of our market conditions down here in South Florida. Let's say 1 to 2 years from now, let's say the prices have appreciated another 5 to 15%, depending on the area. That buyer is not going to be able to go back and get the better interest rate with the better price. On the other hand, if they lock in now the price of the home, they're going to take advantage of that appreciation later on, and then they're going to be able to refinance and take advantage of that lower interest rate. If they're priced out of the market, that's a whole other conversation, but most of the time that's not the case. So these are the times that we need to sit down and have factual conversations with them. These are the charts we need to show them just to put things into perspective so they don't miss out on opportunities.
Yeah, no, I love it. I love that story about your parents too, about the 11%. And also it makes me think of the last webinar we had with Christina Pappas. She made a great point saying the credit card rates are now at 20%. So you also have to think about that. And then also, okay, so let's talk about, there's a lot of talk in the media about a mortgage rate lockdown, lock-in effect, essentially saying that, almost all homeowners now have rates below 4%, 4 or 5%. And so now rates are at 6 or 7. So no one will ever buy, no one's going to move again. And so these are some counterpoints. And just Catherine, what is your take on that theory?
I do have to agree a little bit that's contributing to the lack of inventory. If you need to move, you're going to move. However, now, if you own a home, and I'll use myself as an example, I refinance and I have a 2.8%. I'm never letting go of this home. It makes no financial sense to me. But I'll rent it out if I need to, let's say, get something larger, or if I want to move, and then that will offset then my larger mortgage. So even if you need to move to a bigger home, yes, your mortgage is going to be higher because of the interest rates, but also rents have gone up. So that's going to offset your new mortgage rate. But I will say that is contributing a little bit to the shortage of inventory, because most homeowners, unless they truly need the equity that's in their house, they are holding on to their properties.
Yeah, that's a good point. And inventory is not where it is, still near all-time lows. So very good point. Okay, so time to get creative. 2-for-1 mortgage buy-down programs, assumable loans. Catherine, are you familiar with these? And do you think realtors are going to have to, tap into this in the future?
So this is where having your team set up, and by team, I mean the right title person, your lenders that you can call that will keep you educated on all the different types of financing available. Because right now there are ways to get a little creative where they're not hit with that high rate right away. Like for example, the 2-1 buy down. That means your interest rate will drop by 2% the first year. Second year, it'll drop by another percent, and then it'll go to its normal turn in the third year. What did I just mention before? If let's say 1 to 2 years from now, interest rates drop, you can go ahead and refinance, and then you'll never really feel that higher interest rate. But if not, at least it saved you a little bit within the first couple of years. You can also buy down points. I'm depending if you have the extra cash. If not, I am seeing other lenders out there that are using 1% towards either closing costs or towards a buy down. That's something you would have to sit with your buyers, do numbers and see what would be in their best interest. And they're planning on staying in the home over a long period of time, let's say over 5-10 years, buying it down would definitely make more sense. They're a little tight on cash, they can use it towards the closing costs. And then there's other programs, there's Hometown Heroes, get with your local municipalities. A lot of times there's grants and other types of loans for certain areas, but you need to do your research.
Yeah, no, very good. Awesome stuff. Okay. Okay, so then let's take a look at some of our market fundamentals. You know, like Katherine said at the opening, that Miami is different, is performing ahead, is bucking the national trend. And take a look at migration, job growth, wealth influx, cash buyers, global buyers. Miami is different from many major cities, and so we're going to have some graphics here. This first one here is from the Case-Shiller Index. It shows what cities have the most year-over-year home price growth. And of course, Miami is number one on this list. Katherine, anything you wanted to say about this one here?
Well, there's so many just great things about living in Miami. And it's not just the weather that everybody points out. It's all the benefits to moving to Miami. In addition to the great weather, no state income tax. We're a homestead state. A lot of people are not aware that there's only a handful of states that provide these great benefits. So there's so many different factors that are just driving traffic down to Miami. And thanks to that, and again, we're back to supply and demand, it's causing the increase in home prices.
Definitely. Okay. And so this graphic here takes a look at ultra prime and prime markets. That's over 10 million and over 25 million. And you can see where Miami ranks in terms of, this is globally, and this is the Knight Frank report. Also, Palm Beach and Broward is in there. It really shows the ultra high net worth individuals that have moved into South Florida. And
so,
then, yeah.
Oh. I was going to mention, it's funny. I read a Bloomberg article the other day that was actually mentioning how a New Yorker, they moved down to Miami, was saving an average of $200,000 annually. So we're such a tax haven also. And a lot of times you end up giving yourself a raise moving from other states or uprooting your own companies and moving them down here, that we're just such an attractive market for that super prime and prime market.
Yeah, no, that's a great point. The cost of living and the tax changes, it really makes sense to have what we're seeing here. In the driver's license, and exactly what Katherine was talking about, New York is still moving here, New Jersey is still moving here, California is still moving here. This is from first quarter 2023. This was our chief economist, Gay Corotone. She got this information, and really important information about the top states, the top feeder markets that are moving here. And then, well, I'll go over this one that we have used before. It shows the inbound moves from 2019 to 2022. Miami is there number one. And then, Katherine, I wanted to get to this. This is some new data that our chief economist, our great chief economist, Gay Corrigan, got this information looking at IRS data, new households moving into Miami-Dade. Their average adjusted gross income is 229,300. In Palm Beach County, it's even more. Catherine, could you talk about this impact, this wealth influx that is really boosting our market?
Absolutely. So first, if anybody here does not follow our chief economist, do, because the data and the articles that she puts out, they're definitely a must read and can definitely help you in keeping the consumers informed. The growth of Miami is also helping its neighboring areas, just because, let's face it, Miami is getting a bit out of the price range of a lot of the locals, but it's helping then the suburbs and the surrounding areas grow. So it's not only having an impact in the way Miami is growing and the wealth coming in, but it's also helping the growth of its neighboring cities and counties.
Definitely. Okay, great. Yes, thank you. I'm looking at the chat. Thank you guys for putting in your emails. And also I see a comment here from Zora saying in 2 years, the refinance will factor in with the current or the future home value. Yes, okay. So let's move on to the next slide here, which shows Florida is the fastest growing state. First time that happened in many years, and Florida's population will continue to grow in each year through at least 2032. And take a look at how many net residents per day move to Florida. Incredible amount of migration that we have here. Okay, so let's take a look at our population age distribution. Our design team had put this together. It takes a look comparing 2011 to 2021, and you could see the changes, how there is more of a demographic in the 45 to 54 range, and other differences there. And Catherine, stop me if you wanted any graphic. Please let me know.
I will. Well, I go back to where the migration's coming from. I wanted to point out, so Chris, if you're not getting his emails, let him know, but he sends out fantastic statistical data on where all the migration's coming from. But we're not new to interstate migration. We've been #1 in interstate migration for, I would say, over a decade. There's actually a website that I used years ago, pre-pandemic, to look at where everything is coming from, how money walks. You can click on explore data. You can click on different states, see where the migration's coming from. And you can go hyper local also. So if you click on Miami-Dade County, it's not only showing you where the migration's coming from, specifically what cities, what states, but also where the migration of Miami is moving to, because you also have to factor in who's leaving from Miami and where are they going to. So if you want to start seeing all of this, I would suggest checking that website out, because it's a great addition to also all the other stats that you're able to also obtain.
Oh, that's great. So is it called howmoneywalks.com or?
Yeah.
Howmoneywalks.com. I actually didn't know. I will check that out. Excellent. Okay. Great information. Okay, so now we get to the fun part of the show. We're going to ask you guys some questions about our global study, which we put out every year around December. So in the chat, if you can answer these questions, we do not have any prizes, I don't believe, but you will have the satisfaction knowing that you know your Miami global statistics. So first one is, what is the top foreign country purchasing in South Florida? All right, how many total countries purchase real estate in South Florida? And number 3, what percentage of global real estate sale, Florida global real estate sales are in South Florida? So those 3 questions, if you guys have put in the chat, we're going to see who has the correct answer the earliest. So we'll go back later. We'll have those answers there. And okay, so let's get into some stats and trends. Median sale price. How are we looking at median sale price? But before, I wanted to show a look at our incredible price appreciation that Catherine has talked about. This graphic shows that if you held a single family median price home since 1994, that home would have gained $500,000 in appreciation. And that's not even including inflation. So that's incredible. And then this is a chart that came out earlier this year forecasting all the different markets. and take a look at the one all the way on the right. It's Miami. Miami is, and with Baltimore barely over 0%, but Miami is the market that has the most price appreciation. This is according to Goldman Sachs. All right, Catherine, so let's take a look at median sale price. And again, it increases for single family homes, up 7.83%. Condos are even. I will go through these. Broward, here's Broward negligibly down here for single family, so essentially even. Condos are up for Broward, and Palm Beach, they are up. So Catherine, we're not seeing, when we look back to 2021 and 2022, prices were going up double digits. So now it's more of a what we would expect, the number that we would like, right?
The market finally stabilized a bit, but going back to the graph of that you showed, Miami is actually appreciating now versus the rest of the country. So to make everyone laugh a little bit, the last NAR conference, the NAR chief economist actually spoke, and he was talking about appreciation and averages, but he didn't even use Florida as an example. And we went up to him afterwards. We're like, why didn't you include Florida? He goes, it would just skew everything because we are just a complete separate animal from the rest of the country right now. And of course, 2020, 2021 helped fuel our market. But as I mentioned before, we're not new to interstate migration. Not only were we were known as the rhetoric state, but everyone always had Florida on their radar. It's just a lot of buyers now just decided to make that move sooner. And of course, as I mentioned before, you take into consideration the financial aspect, how much you're saving by moving over here. And then as well, we're a multicultural epicenter. So once everything opened up again, the global market came back. And that just added to all the buyers that we had in the market. But interest rates right now, even though I know it's hard on some of the buyers, but it was a necessary evil because it has helped stabilize the market a little bit more. We're not seeing the crazy bidding wars we saw before. We still have them in the market. You still see them if the home is well priced, but at least it's giving a little bit more opportunity and options to the current buyers that are in the market.
Yeah, no, great points. And I love that story on that was Lawrence Yun. Yeah. Interesting story how he didn't include Florida. Okay, all right. So here's a look at historical median sale prices, and you can see the continued price appreciation. Single family homes, by the way, have increased every single month for 11 consecutive years and really taken off since the pandemic in 2020. And here's a look at Broward, same story. Actually, significant surge since 2010. Here's Palm Beach, the rise in median sale prices. Okay, and how Catherine mentioned earlier about inventory. Yes, if you look year over year, inventory is rising, but if you look historically where it should be, we're still 60% below the historical average of where inventory should be. And Catherine, imagine if we had more inventory, we'd have a lot more sales because the demand is there, right?
No, absolutely. And I think it's a breath of fresh air for all of us to finally see a little bit more inventory, but it's still not enough. We still need to see more. Now we're starting to see year over year because I believe sales were a bit down, but it wasn't because of the people weren't buying. It was just there was no inventory. If you actually saw the days on the market that properties lasted, it was close to nothing. And we currently still have in a lot of markets 1 month supply, but we got to a point where it was less than 1 month supply. So personally, I'm hoping to see a little bit more inventory just so we can get more families into more homes. Because unfortunately, some people have just had to wait because they weren't finding what they were looking for. But at least we're starting to see a lot more options now.
Yeah, and then the key metric is new listings. I've been keeping an eye on new listings, and they are not increasing, but that's key to get that fresh supply of new listings have to move up. And okay, So then let's take a look at how Miami compares to other global cities. If you want to spend $1 million, you get a lot more bang for your buck in Miami. Take a look at this, Catherine, and how much cheaper Miami is compared to other cities.
And this is one of the many reasons that we have become over the decades such a huge multicultural epicenter. It's because I know locals don't see it because we all grew up here and we've just seen it grow, and especially in the last couple of years, it's just exponentially skyrocketed. So it's kind of takes us back a little bit, but compared to the rest of the world, we're still a value. Look at one of the most expensive places, Monaco. Tokyo's not still still behind. Beijing, they get so much.
Your IP address was used without.
Yeah, go ahead.
Somebody from, let's say, Paris, they get so much more for their dollars here than they would over there. And we're starting to see a lot of foreigners buying second homes. Actually, not starting to see, we're starting to see them more because they've always been here. Starting to see them buy investment properties, second homes. The second homes, a lot of times they're, Airbnb has become a big thing down here. So it's an option for them to generate income while they're gone. And then they come and they have this property available to them. And it's still a bargain compared to their native countries.
For sure, definitely. Okay. And this is the same thing. Another take out of this is on the NAR global study, and it shows where South Florida compares to different US metros. And again, same story. A lot of, we are still undervalued in comparison to other cities. And then, okay, so now this is a question that comes up a lot in this webinar saying, hey, prices are skyrocketing. Are we going to have another 2008? Catherine, how would you counter that argument?
Well, let's first go back and take a look at what happened in 2008. There was massive amounts of mortgage fraud. That's what caused the collapse. The financial crisis was a real estate induced crisis, but it was because of all the fraud. And I mean, a lot of the writing was on the wall. They were giving loans to families that were they could not afford them. There were fake income taxes getting written for loan approvals. I mean, it was a wild, wild west back then. So many regulations got put into place afterwards that it's extremely difficult now. Not saying it doesn't exist, but there's a lot of regulations put into place to prevent that from happening. Plus, there's a lot of cash right now. We're in a very equity-rich environment. And these are all stats that you can pull. If you go on Remind, you can take a look at the average equity homes have in your area, and you're going to see there's 20-30% equity or more. There's a lot of cash. You can go in Sunstats, and sorry, I know I'm getting ahead of myself because
I'll
touch on this, but you can pull and see the percentage of cash sales in particular neighborhoods, and some of them are over 50%. So if you start to think about how are prices going to go down if there's even if somebody, for example, let's look at worst case scenario. Somebody loses their job and they can't pay for their house anymore. They have equity. It's almost like a savings account that you are sitting on and not aware of. They're just going to sell the house, cash out, and rent until things get better for them. I know, and again, I think it's mostly the locals because it's been a hard pill to swallow, seeing our prices just skyrocket. I think a lot of them are wishing, for more foreclosures, that prices are going to go down, this and that. But there's just no indicators right now. If you read the data, it's just not there. I don't have a crystal ball. I don't know what's going to happen in the economy in the future. But right now, just with how things are being bought and the amount of equity everyone has, there's just no indicators of any sort of financial crisis.
Yeah, no, that's an excellent way to put it. And yes, on the cash buyers, actually in the news release that we're sending out to the media today, Miami percentage of cash buyers in Miami is 40.9%, and that's up from 37% last month. So yes, a lot of cash in the market. And these are another graphics that back up Catherine's point about how it's not a 2008. You would see more foreclosures, like you said, more bankruptcy. We're not seeing that. Take a look at our credit scores.
Sorry, I think somebody needs to be muted.
Yeah, I did. Yeah. And the credit scores are looking really great. Okay, so let's take a look at, so why buy a home now? A lot of these points you've touched on. A 30-year fixed mortgage is the best hedge against inflation, and it's still high. Housing is not like stocks and bonds. Any other points, Catherine, that you wanted to emphasize here?
No, we've pretty much touched on it. And if you actually go back and look at charts comparing percentage of growth, real estate versus, let's say, stocks and bonds, over the decades, you've always seen that real estate always outperforms the stock market in the long run. And it's a safer and tangible asset. You can actually touch and feel it. It's something you own. It's not the monopoly money that's out there.
Yes, I love it. All right. Okay, closed sales. Let's see the change. And so if you've been following us the last many months, we've been doing this webinar for more than 2 years. But the last 8 or so months, sales have been trending down. And like Catherine said, it's not because there's a lack of demand. It's because, first of all, you're comparing it to 2022, which was an incredible month, May 2022. Number two, mortgage rates were a lot lower back then, right? And now we have less inventory, right? And so here's a look at, so closed sales are down for Miami and also for Broward and for Palm Beach. Okay, so let's take a look at a market watch on Matrix. Are you guys using this? This is most real estate statistics are backward looking, so this helps you see what's happening in the market in the last 7 days. Catherine, do you use this and do you recommend this to realtors out there?
I do, and it's one of the things I encourage all the agents in the office to use, especially when, regardless if you are inexperienced or experienced, but especially in your farm area and the areas that you mostly work in, MarketWatch, it's great at a glance product where when you open up Matrix, you can immediately see just what you see there, coming soon, new, back on the market, and you can customize it. So you can either keep it on a general county level, city, or you can map it out if there's a specific neighborhood. However, for you all, if there was a specific city I would farm, I would have it on that city, just so you can see what's going on at a glance, and incorporate also and add hot sheets. And there you can add hot sheets specifically with the names of the neighborhoods that you farm, or keep track of your own neighborhood also. People love to talk about real estate, and your neighbors are the first ones to ask you what's going on. So you want to keep track of all of these and have those hot sheets so you can see what's going on a day-to-day, week-to-week basis.
Awesome tip right there. Add the hot sheets. Yes, great tip. Okay, and so Catherine hinted at this earlier, SunStats. This is a free service for Miami realtors. It's on the Miami Gateway. If you guys aren't using it, you're missing out, because it gives you, we're going to show you what it gives you. And also other ways you can leverage stats is going using our zip code reports, which are on sfmarketintel.com. You guys have bookmarked that, right? I hope. And then also RPR. Are you guys using RPR? And so we'll break down each of these. Here's RPR, the type of information that you could get on RPR, any city that you want. Make sure to use that. Okay, and so here's an example of SunStats. This infographic I created here literally in a minute. You just put in your city, the metrics that you want. It will pop out with your headshot and your information, and so much great stuff here at SunStats. That's the direct link there at the bottom, sunstats.floridarealtors.com.
Can I add something to this?
Yeah.
Go back. So that pretty little infographic on the right-hand side, what does that remind you? I know probably everyone here knows of Keeping Current Matters. They send out subscriptions. You can actually pay and subscribe to it, but why pay for something that you can get for free, especially when you're starting out, right? The association, Florida Realtors, provides so much, and it's all on your dashboard. You see how it's branded there with Chris's information on the bottom. The graphic on the left-hand side, you can also brand it with your information on the bottom. And it's basically the same data that you get from the keeping currents that I see over and over, everybody reposting on their Instagrams and stories and Facebook. And just, you always want to keep everything in-house. Have it branded to you so you can get that same beautiful infographics, the same data, and actually personalize it to yourself. And you can be more hyper local because the data they put out is very generalized to the US market. At least you can pinpoint the specific cities that you are targeting.
Yeah, no, that's great. Yeah. I mean, the name of this webinar is Leveraging Market Stats to Boost Your Business, and you're giving incredible tips to leverage. Thank you, Catherine. Yeah, much better than keeping current matters. All right. Okay, so let's take a look at new pending sales, best indicator of future closed sales. And we could see that they are down 16% for new pending sales. That's overall. But take a look at single family. So we might see a decrease there in the next month when the closed sales come out. Pending sales for Broward. These are official statistics that we're releasing to the media today. And you could see the decrease there. And then same story in Palm Beach, actually less, and perhaps the market's turning a little bit there. Okay, so let's take a look at dollar volume. How much is being spent for all property types. And this always amazes me. Take a look at Miami-Dade. Can you wrap your head around this, Catherine? $2.1 billion in Miami-Dade, 1.5 billion in Broward, 2.4 billion in Palm Beach. It shows the power of our industry, right?
Absolutely. Absolutely. No, and the crazy part is that it shows that there's a decrease, but again, it's because we had just such a phenomenal last 2 years. So that just means this number was even bigger last year.
Yeah, that's true. Okay, months of supply. Okay, so this is how much inventory we would have if the market stayed at the current pace, right? How much it would take to sell out all the homes in that neighborhood or the market, whatever you're searching. And so 6 to 9 months is a balanced market. Less than 6 months is a seller's market. More than 9 is a buyer's market. Obviously, overall, we're in a seller's market, but if you break it down, different price ranges, different hyper-local markets, it's a different story. And then here's a calculation of how you could do this. I'll save time, and you guys will have this presentation when you. I'll be sending it to everybody who put in their email in the chat, so you'll have this. Okay, and so this is a big number, right, Catherine? This is months of supply, 4.3 months. And like we were saying earlier, it's increasing year over year, but we need more, right?
Yeah, we're still in a seller's market. I mean, correct me if I'm wrong, but finally an average market is more or less 6 months supply. So we're creeping there, we're getting there, but not yet.
Yeah, not yet. And so here's a
Even
look
the
at
condo
Broward.
market. Remember when the condo market was at a 2-year supply?
Oh, yes. Yes.
And that was just a couple years ago.
Yes. And also remember, there's also that famous story about how, right after the 2008, how there was headlines in the newspaper about how it would take 20 years to sell all of Miami condos, and it took what, a couple years?
At the time.
Yeah, exactly. But you can see Miami-Dade has more supply than Broward. Broward really bottomed, and like Catherine said earlier, it was down to like 1 month in Broward and also Palm Beach. But now Broward and Palm Beach a little bit more, but still a lot more to go in Broward and Palm Beach. Okay, so here's a look at luxury, and you could see luxury, how many months of supply, 10.4 months of supply. And we were talking with the Ron Sheffield, and he was saying that, luxury, it can sustain, 10 months of supply. That's normal, right?
Yeah, normally, before the last 2 years, normally in the luxury market, it was normal to have, a listing for a year, just because they're higher price points. And a lot of the properties are unique. It's not the cookie cutter homes that you see normally in development. So a lot of times they attract specific buyers that it just takes longer to sell, but that's normal in that market.
Yeah, definitely. Okay. Okay, and so here's a look at different price ranges. And like you can see, for instance, condo luxury over $1 million is 12.5. So that's a buyer's market, right? Exactly. Do you look at these, Catherine, at the different price ranges and
I do. So I always look at cities and then the different price ranges. The luxury market, it seems like it's a buyer's market right now, but again, it depends on, and we go back to creatures of habit. We got very greedy the last couple of years with overpricing everything because the house would sell over ask, and then the neighbor would wait until that would close, list it for 10, 20% more, and it would still sell for over ask. So people are sort of still in that mentality, but they're slowly weaning down and starting to realize that we're heading into a semi-normal market now, or we're in a normal market. So I think especially in that price point, they're still trying to push as much as they can for higher prices, and it's probably causing more of the delay
yeah,
in close
yeah.
sale.
Yeah, in a healthier market, right? I know 2021 and 2022 was incredible, but to be healthy, you want it to be balanced for buyers and sellers.
Mm-hmm.
Okay, all right. So let's take a look at different neighborhoods. We talked about the hyper local, and so this is graphics that we put out on sfmarketintel.com. I told you I'd say it a couple of times, but these are the hottest markets by months of supply. And Catherine, you said this earlier. Yeah, there's some neighborhoods that are 1.1 months, and there it is, Country Club. Any of these markets that stand out or you wanted to talk about?
Well, what stands out to everybody? Look at the cities. It's the cities where I would say it's, your starter home, average price, single family homes. It's not the Gables or Pinecrest. It's, where you can find more reasonable price points. That's why the minute any of those homes go on the market, they're being snatched up. And also those families are tending to hold on to those properties or rent them out instead.
Yeah, no. Excellent. Okay, and so here's a look at Broward, the hottest markets in Broward. Margate checks in at #1 for single family and Davie for condos. And here's a look at what were the hottest markets in Palm Beach, Royal Palm Beach Village and Green Acres, Palm Beach. And let's take a look at Martin County, North River Shores, and also Port Salerno. Again, these are on sfmarketintel.com. You guys could download these, use these in your presentations or social media. All right, active inventory, one of the most important metrics. We've mentioned time and time again how important it is. How are we doing in active listings? Yes, they are up sizably, but still, for instance, Miami-Dade, the historical average, I believe, is around 19,000 historically. So, we're still down 58% of where it should be. But any other points, Catherine, here on this chart?
So it was a point I should have made probably before. Knowing your data, know the active inventory, but also know the average closed sales, because one of the things that we are getting hit with a lot is buyers. I'm waiting for the market to go down, which we touched on before, but why? Because they're going on all our favorite websites, Zillow, Redfin, all the million websites out there. And what are they seeing? Prices are decreasing, but it's from the active listing. So the minute somebody tells me that, oh, but there's a lot of price, the market's going down. I ask them, where are you getting that from? Oh, I'm seeing all the price decreases. Have you taken a look at the closed sales? That's like my immediate, I don't even hesitate. It's my immediate response. And then they just blankly look at me. And I'm like, but have you taken a look at the closed sales? Have you compared them with the closed sales from a couple months ago or even last year? Okay, you might have a point. You have to bring these facts up because that's how you empower yourself. And you also show that you're educated in what's going on with the market and you can steer them in the right direction, because the media sensationalizes everything. They are just they want to believe certain things that they're seeing, and it's up to us to bring them down to reality and show them exactly what the conditions are and what they need to do to obtain what the property that they want.
Yeah, that is so great. That is so great because I hear that a lot. Yeah, that you know, I see the listings decreasing, but you got to hit them with the facts and your knowledge, and that's great. Median percentage of original price received. So how much to listing are they getting? And this is we've always been, this market has always been 96% to 100. And last year, if it could have went over 100%, it would have. And actually, if you look at the chart, the numbers go off the chart because that was an incredible period right there in terms of so many bidders. And Catherine, how is the market now? Is it are we seeing more bids now because the inventory is still not where it is supposed to be?
So it depends where the home is priced. If it's, we're starting to see homes now have a longer time on the market if they're overpriced. Just because buyers are at the point where they're not going to overpay. There are other options now where they don't have to jump at the first thing they see. Now, what I am seeing that does move fairly quickly, even if it's overpriced, are the fully renovated homes, because that you don't find that a lot, and everything's gone up so much that buyers are still willing to pay more for those type of homes. However, and it's interesting because you can see this by tracking it. A lot of times you'll see a house sit on the market, and if they drop it to a certain price point, which is where they need it to be, you see a bidding war being created, and then it'll sell for over that last list price. So if you're going to a listing presentation and you're pulling the comps, let's say on Matrix, I like to use this one page and I incorporate it. Click on the comps that you want to use, go to print CMA one line. It's going to show you the original price the homes were listed. Then list price. That means that was the price that it was listed on the MLS the moment it went under contract. Not what it went under contract, we have no idea, but what it was currently. And then the actual close price, and then the days on the market. So it is a very easy, at a glance sheet that sellers and potential sellers can look at and can see the homes that are overpriced, how much longer they're taking to sell. And they'll see that at the end of the day, more or less everything is selling for that price that you're suggesting. Again, they're always going to have a price in mind, but you need to show them facts on why the price you're giving them is what they should stick with, especially if they have a specific time frame.
Yeah, no, that's interesting. I think these tips are going to help a lot of everybody on the call. I mean, really great stuff. Great stuff. Okay, so median time to contract. How long does it take to come to terms? So now Miami-Dade, it takes 32 days. Broward, 25 days. Palm Beach, 29. I remember when these numbers were, 11, like you said earlier, and 9. And so now I think one of the economists that I follow, his name is Logan at Housing Wire. He talks about how if time to contract is a teenager, it's not healthy. But so now we're no longer a teenager. We're past college, and we have a job now, and we're getting towards that great market, right? Yeah. Okay. All right. So now let's move on to what we've gone over so far. So we talked about how inventory still has more room to go. We talked about our mortgage rates. We didn't mention this, that our chief economist forecast rates to go as low as 6% through December, and the sales are down because of comps, and our prices continue to rise. All right, so let's get to our global study. Who got the answers correct? So let's see who has the first one. What is the foreign country purchasing most in South Florida? It's Argentina. So let's take a look and see who had that first.
Who gets bragging rights?
Who gets bragging rights? We don't have a all expense paid trip or anything like that. Trying to see here.
But guys, this is great information, especially if you want to use, let's say, Google targeting or any type of online targeting, because you can then target these specific areas. Also, as I mentioned before, we're a global epicenter down here. Keep an eye on the current trends and also political states of other countries, because you start to notice those countries a lot of times are the ones that start bringing the money over. We saw a huge influx with Venezuela when they were having their first having their crisis years ago. Colombia has a little bit of unrest. We're starting to see a lot of money coming from that country over here also. Argentina's not in the best state also. We're seeing money come over here. So keep an eye on what's going on in the rest of the world, because more than likely you're going to see that money trickle in the next year.
Very good points. And so I looked in the chat. The winner is Marcela Mauri, Argentina. She said, Argentina, congratulations. And there were some guesses on China. China is not in there. Okay, so let's see who got the next question right. By the way, also I had to put in Lionel Messi there, that he's will be coming to play for Inter Miami for Argentina. All right, so how many countries purchase real estate in South Florida? The answer is 54 countries.
Wow.
And I will see who had the closest. Someone guessed 20 countries. I don't know if anybody had that. Yeah, no, 20 countries was the closest. So it's 54. And shout out to Jenna Kerr, who just said it's really going to increase now that Messi is coming. Laugh out loud. Yes. Okay, so it's 54 countries. All right, so let's go to the next question. What percentage of Florida global real estate sales are made in South Florida? 53%. Over half are made in South Florida. So anybody purchasing in Florida, they pretty much buy in South Florida. And what's interesting here is take a look at number 2, Orlando. They only have 10%. So that really speaks to the power of our global real estate, right, Catherine?
Yeah, no, and especially take a look, put all the interstate migration aside. Now let's just look at the global market. Look at everything Miami has to offer. We are one of the biggest international airports. So getting to and from here is easy, especially if you're traveling to and from work. If you have an import-export company, we have one of the biggest ports. We have the one in Fort Lauderdale, which naturally should have been the biggest port down here, but we have Miami port also, which is one of the largest. We have, it's one of the biggest cruise destinations. There's so much going on here in South Florida that it just attracts everywhere. People from all over the world, they want to do business here. They want to live here. They just want to stay here.
Definitely. Okay. And just saw a question in the chat, when could we expect to get the presentation? I will, I'll jot down all the emails. I'll send it to you later this afternoon. You guys will have it later this afternoon. Let's go on to our next slide. Tools and resources. We talked a lot about these already, but let's just emphasize them. SunStats. You guys have that written down, right? SunStats. You could get it on our Miami Gateway. We haven't talked about this. We have co-branding materials. That's miamirealtors.com/co-branding. We put out our top ranking markets, where Miami ranks, where Broward ranks, and Palm Beach ranks, 20 reasons to buy. You could download all this and you could put your information on it and co-brand it. So that's that. We also have Photofy. I'm not sure if you guys are using this. This is only available on your phone. And basically the association has loaded a lot of templates and graphics onto the app. First, you got to register. There's the website there. You got to register. But anyway, it's free for Miami members. You can have it on your phone. We have, for instance, we have an open house template where you could upload the picture of the open house, and then you have the graphic around it, which makes it easy for you to send it. So realtors are always on the go, so you should be able to use this. Again, it's free. You just have to register and download the app. Market reports. We talked about sfmarketintel.com. This is, for example, this is the reports that you will get there when you go there, sfmarketintel.com. We do market focus infographics, videos, reports, and more. We have zip code and city reports. Again, you guys know the website, sfmarketintel.com. RPR, we talked about that. And okay, you guys have any questions on any products and services? These are the trainers. They are full-time trainers. They will help you with any Photofy. You have a question on RPR. You have a question on SunStats. Right here, the email is probably the easiest. trainers@miamire.com.
I want to mention one thing also, under resources, because the association provides so many resources that you can incorporate into your listing presentations, and with the people you're working with. You can also download a sheet that shows all the global partnerships that we have. This is especially useful for when you're dealing with luxury listings, because a lot of times, a lot of foreigners are the ones coming in and looking at those. And you can say, look, your listing is going to appear in all of these different websites all around the world and these countries. And a lot of times those countries match the countries that are currently at the top of in buyers here in South Florida.
Yeah, great point. Association has 256 international partnerships in more than 70 countries. Amazing. Okay, one of the last couple slides here, cross-market demand. What is cross-market demand is which markets are looking at our listings from out of state. This is put together by realtor.com. You could have access to that. They update it every quarter, and you could see, no surprise, New York is number one. Catherine, any of these, and you talked about how the realtors can leverage this, right?
Yeah. So if you are looking, if you want to do, like, for example, online advertisement, whatever your budget is, whether it's Facebook, Instagram, or Google ads, you can use this information. And actually, instead, everyone's advertising down here to locals. Why don't you target and advertise to these cities online? It's actually cheaper than advertising down here, especially if you're doing Google ads, the pay-per-click, it's less money, they're more quality leads, and it's going to be less competition, because if they already established a relationship with you and talk to you, they're going to fly here and work with you, versus a local that has a million other realtors around that they're probably meeting a different one every single day. So just think outside the box when it comes to your marketing and prospecting.
Yeah, I love it. Okay. And so that's a look at Miami-Dade. Which markets are looking at Broward County? Hey, same story there. A lot of New York's here, a lot of Georgia's.
If you go to Fort Lauderdale and you just listen to people talking, it's all people from the Northeast. That's all the accents you're hearing right now.
The New York accent, yes.
Yes.
Definitely, yes. In Palm Beach, even more so. Incredible. Look how many New York markets are looking at listings in Palm Beach. Really amazing.
And if you ask them, one of the biggest things I mentioned, we're a homestead state. New York, Jersey, they're not. Their taxes go up exponentially every single year. Here, at least you're capped at that 3% if we do have a huge increase in appreciation in your taxes, if it's your primary home, of course. But over there, that's not the case. And a lot of times, especially the ones that are retiring, it's becoming, even if their house is paid off, it's becoming unaffordable for them to keep up with the payments, just because of the taxes alone, due to the increase in the neighborhoods. So Florida is very attractive over that. And of course, you have the other benefits that bring in your high net worth individuals, where your home is protected. You get personally sued. No one can ever touch your house.
Very good. Yeah, very, very impressive. Okay. And then another thing I wanted to show here, which is interesting, is you see the red column at the top. It says views from other states. In Miami-Dade, it's 32.1, but it increases. You get more views from out of states in Broward. Palm Beach, even more. And in Martin County at 46%. So it's a lot of cool things you could point out with this realtor.com. And so here is my information, chris@miamire.com. And then the last slide is our social media. Catherine, thank you so much. You were awesome. I think a lot of incredible tips that are going to help all the realtors that really stayed on with us. Thank you for the whole program. So thank you,
My
Catherine, so much.
pleasure. It was great. And as I mentioned, if you're not getting his emails and if you're also not following our chief economist, Gabe Corcoran, do it because their information that they send out weekly is invaluable and will really help your business.
Excellent. Well, thank you so much, guys. And we'll see you here for the next one. It will be on July 20th. All right, guys, we'll have a great rest of the week. And thank you again, Catherine.
Bye.
Bye.
Bye, everyone.
Bye. Thank you.